That's cool.
Just as a request, when we do go through our report, we normally share it on the screen with you guys. Is there any way we can get the capacity to share our screen on our end?
Yep, so definitely. We're just going live right now. I think we're good.
Live. 8:26 we'll call a meeting to order. We have a few guests today, but I think we'll get to those items as they come up on the agenda. Is there anything else that so start with the minutes from the June meeting. As you recall, we canceled the July meeting because of the flooding. So we have Kaylee sent out last week the minutes for both the June meeting and the annual meeting, which we don't have to put those next year. So motion to approve the June 6th board meeting minutes. That's good. Second. Jerry. All in favor? Aye. Motion carries. Motion to approve the 2024 annual meeting minutes. Second, Jerry. All in favor? Aye. Motion carries. All right. Financial reports for June 2024.
Okay, so I'm just peeking at your computer, Brittany, so I can see where you're at. So we've got our
Expenditures on.
Sorry, what's that?
Expenditures are up.
Yeah. So not much going on in the IDA. These are just the last of the pilot payments out clearing. If anyone has any questions on that. Okay. And then moving on to the profit and loss budget performance. Again, because the budget we were in transition, isn't the most telling document. It just shows that there's really not a lot going on in the IDA because the majority of activity is now operationally in Naturally Lewis. There, we just had an application fee for that's Redthorn Beats. It's really the only notable item, with the exception of the Trinity Ave property taxes. That is the second place year balance. We were paying those and then they reimburse us, or should. So that's what that is there. Anybody has any questions on that? Right, and then moving along to the summary balance sheet. Again, not a whole heck of a lot of activity, so not a lot of change. Anybody have any questions there? And then finally moving on to the loan fund status report. Which again, the only thing of note is the delinquency with second place tier, which we're already aware of and working on, as we'll address later. Any questions there? Okay.
No other questions for Trish, and take the motion to approve financials. Motion by Mackenzie, second by Jerry. Any discussion? All in favor? Aye. Motion carries. All right. Items for approval. They have Bowers joining us for the draft of the annual audit.
All right, I'm going to share my screen here. I just want to make sure for a second, does everyone see the draft copy of the audited financial statements?
Yes.
Okay. We'll try to keep this brief for you all. If you guys have any questions, just let us know, either during our presentation or at the end. Okay, so the first item we're going to go over is the standard audit report. Basically, we have audited the accompanying financial statements of the County of Lewis, IDA. And as of for the year end May 31st, 2024, in our opinion, the financial statements referred to above present fairly in all material respects the financial position of the IDA as of May 31st, 2024. Basically, this is the best audit opinion you can get. We had no disclaimer, no adverse or any other opinion. We had an unmodified opinion on this audit. So again, as far as issuing an opinion, best one there is. Okay, we did conduct our audit in accordance with auditing standards generally accepted in the US, as well as standards basically contained within government auditing standards issued by the Comptroller General of the US. Basically, you guys are a component union of the county, as well as administering pilots and grants. Ergo, we have to follow the government state auditing standards guidelines. So, okay, next page. Management is responsible for the preparation and fair presentation of the financial statements. There are obviously a list of items in which management versus the auditor are responsible for. This report does go into it in a little bit of detail. We're just going to try to keep things high level here. As far as the auditor's responsibility, our objective is to obtain reasonable assurance about whether the financial statements as a whole are free from material misstatement due to fraud or error, and issue the audit report with our opinion. We do this using reasonable assurance. Reasonable assurance is a high level of assurance, but is not absolute assurance, and therefore is not a guarantee that an audit conducted in accordance with generally accepted auditing standards and government auditing standards will always detect material misstatements when it exists. Basically, we do procedures, and then based on our opinion examination, we again just issue the opinion. We are also required to exercise professional judgment, identify and assess the risk of material misstatements, obtain an understanding of the internal control environment, and evaluate the appropriateness of certain accounting policies implemented by management. Okay, next page. Attached within this report is an MD&A. This is basically, this is required. Accounting principles generally accepted in the US require that management's discussion and analysis be presented to supplement the basic financial statements. We have applied certain limited procedures, but we do not express an opinion on it. So, okay. Therefore, we are going to skip over the MD&A management discussion and analysis. If you do want to go through it with management or read through it later, that's great. It's just basically a overview of the year's occurrences and certain comparative information to prior years. Okay. We're going to start on the statement of net position. During the year, they had a decrease of $166,000. Basically, this was due to the loss of on operations of the cash balances. The $204,000 prepaid balance is the Naturally Lewis contract paid in advance. That's for the period of the contract from June to December 2024. The restricted assets are fairly consistent with the prior year. We also do have a listing regarding the Tug Hill loan under here, just because it's under, the loan was issued under a specific program. Capital assets during the year did decrease by $88,000. This was due to the installment sale to Backyardigans that you had incurred during the year. So overall, the loans did increase slightly by 48.4 thousand. You had a new equipment loan that was transferred over from a different entity, an installment sale loan that was approved during the year, as well as a new loan issued underneath the restricted program. So. Okay. Next item we're going to go through is the statement of revenues, expenditures, or expenses and changes in net position. During the year, you did have a significant decrease in the operating revenues. A part of this is due to the fact that essentially the contract regarding economic development with the county was moved from the IDA to Naturally Lewis. You also had a decrease in agency fees. Last year, you had a little bit of a bubble related to new contracts that were approved. There weren't as many agreements in the current year, so that has decreased slightly in the current period. Payroll expenses decreased by 83.5 thousand. This was due to the fact that obviously you went from a payroll administrative expense to a contractual administrative expense with the county, with Naturally Lewis during the year. That's seen down here underneath the administrative services. Basically, in the current year, you had the $295,000 increase to basically capture the cost of that new contract with Naturally Lewis. Economic development costs right above it did go down by $46,000 during the year. Basically, you guys just had significantly less activity with that item. Down here at the bottom, you did have a gain on the sale of the building through that installment sale on concerning the Trinity Ave, and you also had an increase in the total revenue as your interest rates on your bank accounts went up during the year. Okay. This is the cash flow. Basically, it presents things more on a cash basis versus an accrual basis during the year. Biggest swings are obviously you had an increase in the received from the administrative. Right now, we only show a portion of that with revenue simply because this is mostly related to the receivable payment that occurred during the year. We'll get into those on the notes. You guys did have loan receipts of $40,000 during the year. And then you did have a slight purchase of capital assets. Basically, you had incurred costs for the improvement of the Trinity property immediately prior to the sale. Okay. Second page of the cash flows. So during the current year, we're going to discuss it in the notes, but there was a bit of a verbiage change for CECL, adopting CECL standards. This is the credit loss recovery and expense. Basically, we're now presenting it net. This used to be bad debt. So essentially it is the similar or same item. It's just under new verbiage, under the new standard. In the current year, there was basically that $36,000 change to pick up on the forgiveness and obviously the change in the allowance from the prior year. And also we had to adjust the prepaid that you saw on the balance sheet. In the notes, we're going to skip ahead to page 20. Okay, I had just discussed the basic new standard adoption related to CECL. It's basically credit loss standards regarding the allowance and other receivable items. Loan receivables are stated at unpaid principal balances less the allowance for credit losses. Again, this used to be allowance for bad debt. Now it's credit losses. Management provides probable uncollectible accounts through a provision credit loss and an adjustment to an allowance for credit losses based on a loan rating system. If you remember, annually, basically you review loans outstanding, determine whether they are satisfactory or they have another condition, and then assign a rate to that. Using that rate, basically there's this allowance that is created in case the loan fails, just to keep in compliance with certain standards. Okay, Factors relevant to the assessment prior or include prior collection history with customers, if they haven't been paying, if they typically have an issue paying, the related aging of past due balances, projections, historical trends, and forecasts for economic conditions. Basically, if there's an economic turn down, the risk of failure could potentially go up. Okay, next page. And this is just the note regarding the adoption of the recent pronouncement. Effective June 1st, 2023, the agency adopted ASU 2016-13 Financial Instruments Credit Losses, measurement of credit losses on financial instruments. Again, this is CECL. You'll see a lot of the terminology change, but as far as the organization, there hasn't been any significant material changes regarding the implementation. Okay. This is just a brief note that says basically there were certain non-cash transactions during the year. This was just to pick up the installment sale for the $100,000 on the Trinity property. Okay. This note 3, it's just a heads up. Basically, the organization had their balances for their cash balances on the accounts. They were either covered underneath FDIC insurance or they were collateralized by the bank in full. The agency does not typically purchase investments, so isn't exposed to any material interest rate risk regarding that. Okay, in the current year, you'll notice that they had decreases of 93.9 thousand. Again, basically, the Trinity property was removed from the schedule because it was sold during the current year. There was that slight increase immediately prior to the sale that they had to pick up regarding the Trinity Ave property. Okay. Loan receivable balances as of May 31st, 2024. The unrestricted loan receivable was $348,000, and the amounts restricted underneath the RBEG loan program were $17.4 thousand. We have attached below schedules which basically detail out each of the individual loans and outstanding balances for the year. We did have a few new loans listed in the current year, including the lease that was transitioned from the prior party, the installment sale of the building, and the new Tug Hill Artisan loan that was provided now has a $17,000 balance. They do have a credit loss booked here of $41.3 thousand, and this is related to your loan risk document. So basically, the net is what is presented within the balance sheet previously. We're going to skip ahead to page 28. Previously, we were talking about the loan risk worksheet. Again, this is just the summary information regarding the current status of the loans. Satisfactory were 131,000 and watch is currently 233. Below here is just a schedule of maturity saying that certain loans are current or they are outstanding past 30 days, 90 days, etc. And right here, this was basically includable underneath the new CECL adoption as well. It just gives you a breakdown of the movement within the allowance account for the year. It started off as 13. There was a provision for credit loss of 37,000 in the current year. Basically, new balances reported. You recovered 1.1 thousand that was previously listed as an under the allowance heading. And then you forgave 8.5 thousand on that lease transition. Okay. On the cash flow, basically, we noted certain receipts of balances, 400,000 regarding administrative expenses. I had indicated that most of those were due to collection of receivable items previously reported as revenue. And right here, it just gives that breakdown for it as far as the balance currently owed by Flat Rock Wind Power and Number 3 Wind over the foreseeable period, and this just gives you a schedule for the repayments. Okay. Restricted position, basically these are just certain restricted balances underneath the micro enterprise loan fund and the rural business loan fund. They're not easily spendable. Basically, you have to follow certain criteria, so it is under a different net position category. Okay. And then we're going to skip ahead to the internal control report. Basically, if you want to, if you want to just review this schedule here, it says in planning and performing our procedures, we have to consider the internal control environment in designing our audit procedures for the organization. As a result of our review in our procedures, we did not identify any deficiencies in control that are considered material weakness or a significant deficiency. We also did not identify any significant material non-compliances during our audit either. So again, we did not identify any issues related to these items.
That's a very
Yeah.
good job with that, because we see that often where, with the financial statements, we might issue an unmodified opinion, then when we get back in the later reports, sometimes unfortunately, we see organizations that have some material weaknesses or significant deficiencies in controls or even material compliance findings. So good job with that we don't see any of these with the IDA.
Okay. This is a new one for you guys. Basically in the past, you guys did not have any investments. You still don't hold significant external investments. However, according to new discussions and requirements with government agencies, there now has to be a separate report that's listed, posted, etc. Basically discussing the investments of the IDA. In connection with our audit, nothing came to our attention that caused us to believe that the agency failed to comply with the agency's investment policy, New York State Comptroller's investment guidelines, or Section 2925(3)(f) of the New York State Public Authorities Law during the current fiscal year. This is our communication letter. We issue this every year according to our standards. Basically, this is just a description of certain factors that are reviewed or considered during our audit. The first item we'd like to draw attention to is the first sentence here underneath qualitative aspects of accounting practices. Basically, management has the responsibility for the selection and use of accounting policies. They can decide to go with one method versus another as long as it's a GAAP-approved methodology. During the current year, as described in Note 2, recent pronouncements, the organization did adopt the 2016-13 financial instruments credit losses CECL during the 2023-24 fiscal year. Okay. The organization does have certain estimates that are utilized in drafting the financial statements. The most, basically, the largest significant estimates that are affecting the financial statements were the estimate of useful lives of capital assets. In the current year, you guys obviously had a sale, and right now you're down to the investment in that
The business park.
in the business park during the current year. That's about $74,000. Management's estimate whether an allowance of for credit losses is necessary. So basically the calculation and posting of balances related to the allowance for the credit losses. Previously, bad debt is also a significant estimate for the organization. We did not encounter any significant difficulties in dealing with management and performing our audit. We are pleased to We are pleased to report that no disagreements regarding potential accounting postings or other issues occurred during the audit. There was some discussion over certain adoptions, but there was no disagreement in the end. The IDA does have an option if they do disagree with any of our opinions or our recommendations regarding the adoption of accounting pronouncements or estimates. They can consult with outside attorneys. To our knowledge, there were no such consultations that occurred in the current year. And again, we didn't have any significant issues. We did have a few adjusting journal entries that were required. Previously, the entirety of the Naturally Lewis contract for both 2023 and 24 on a calendar year basis were reported as expenditures. Under the agreement, basically, this is to be paid, this was supposed to be paid monthly, so a portion of this was essentially paid in advance, and you will be receiving the benefit for it in the 2024-25 fiscal year, so we want to make sure that that is where that expense ended up. And then also we had to pick up the property sale on the Trinity Ave underneath the new installment agreement. Okay. Last item that we have for review today is our management letter. Basically, this is a list of recommendations. These items do not basically rise to a level of a significant audit risk or concern. It's just suggestions for the future moving forward. One of the items is basically when we were in discussions with government agencies during the year, they had indicated that regardless of whether or not one of the IDAs or DCs has an investment with an external party, they are still required to basically post certain information regarding investments as well as the report at year end. So this is just the notification that, hey, we had this discussion. We do recommend, obviously, that you guys post this and provide this information moving forward just to make them happy and comply with their current regulations.
We've gone round and round with the authority budget office on this, and they've been pretty much sticklers about it, that like Janelle just said, they just, for our recommendation, they just want to see something prepared, even if you don't have investments. They just want something posted with the Paris information. Again, we have, several clients that are subject to the authority budget office, and we had these discussions back in the winter with some other clients, and they said, no, just please file this anyway. So that would be our recommendation.
And the last item is basically during the year, we noticed within the meeting minutes that there were a few extensions that were approved on a contract. When reviewing the contract, it basically said that approval had to be provided by both parties in order to provide any modifications of the agreement. Documentation for the IDA is maintained by the board. As far as your board minutes go, you have discussion, approval, etc. They're publicly posted. But the documentation for the initial request from the loanee was not provided for both instances. Basically, if you are going to have a modification on agreement, we just recommend that there is formal documentation, whatever your requirements basically need in order to approve that modification of agreement in case anything happens in the future. So, does anyone have any questions?
Looks like it. Thank you very much.
Thank you, everyone. We appreciate everyone's cooperation during the audit. The audit runs very smoothly. It's a tight deadline for the IDA. It's a tight deadline for all IDAs, to meet those Paris requirements and reporting by the end of this month. So it is August 1. So if the board does approve the financial statements, we'll be able to turn these around and provide you with the final PDF copy, very soon on that. So you'll have that for filing. But again, thank you for everyone's hard work and cooperation throughout the audit and just trying to make this go smoothly and finish in a timely manner.
Trish, it was nice working with you in the current year, and we promise it's normally very seamless with the audit. Don't be scared by it. If you have any questions, Cheyenne, Brittany, Trish, if you have any questions during the year, if you just want to shoot them to us, basically we can review it and get back to you. But otherwise, thank you again for all of your help throughout the audit. We do appreciate your assistance, so.
Thank you, Janelle and Liz.
Thank
Appreciate
you.
Okay.
All right,
it. Day.
okay, thank you, bye-bye.
Bye.
I do wanna just quickly commend Trish for her work on this, because in a year, so much transition, both internally with who was mostly covering the audit, which was mostly Trish, and with organizational changes, to still get basically the plus there, it's pretty awesome.
Thank you, Trish.
I've got,
Yeah,
in the new fiscal year, does our interest income not get reflected on our financials anymore? Does it show up under National Lewis now?
No,
Like, cause I didn't see anything in June, so that's why I assumed, but I thought I just asked.
June. Oh, in our financials.
Yeah. Well, going through this, there was the entire amount, 77,000 for the year,
yeah,
but then I was thinking about the June financial, it didn't reflect in there any interest income. So I was just wondering where that went, or if we didn't get any.
interest income is on the June financials. There's two different items because actually there's three. So 161.58 in June was the interest income on the June financials.
Yeah.
It's just for
How come it was so much less than what we've been getting? So I just assumed that was something totally different from a different source. But because of, I think we were getting like $5,000-6,000 a month last year. Is that not happening, or did something mature?
So we do have one client who is paying ahead of time. That
Oh.
could be
No, that's
No.
Trish.
we'll have to look at that.
Yeah,
because-
not on our loans. I meant like from our
Investment.
balances,
Investment, like
yeah.
they-
I'm completely misunderstanding what you're saying.
Just a question, I don't know.
Yeah, we'll look into that.
Did we get a discount for being on top of our stuff from the auditors?
No, they're charging some more.
I saw that.
Always. Yeah, we'll have to look at that, Trish.
So that's the interest on loans, but
Yeah, cause we earned like.
The ones that we haven't, sorry.
it doesn't show
In,
anything
out, it's all over the place.
where it comes from.
So. It's still running high.
Right,
I know we budgeted conservatively, but
Yeah.
it's slowly.
Yeah.
Super high, especially with the class.
All right, in the interest of time, we'll make a note to look into that, so in terms of the audits, are we being asked to?
Approve the draft financial statements.
And the communication letters and stuff, or just
The
okay.
draft.
So a motion to approve the draft financial statements shared by Bobbers. Got in the second. Kenzie, any discussion? All in favor? Aye. Motion carries, thank you. All right, moving on, the incentive application for Red Barn Meats. Well, Jordan, owner of the company that is here with us, so thanks for joining, Jordan. Cheyenne.
Yeah, Gordon, if you wanna. Go to the floor and just kind of explain the project a little bit to the board. Yeah, what you're doing and.
What we're wanting to do is, add, basically gonna be adding 6,000 square feet to our existing facility, which is more than double our size. The main focus on the expansion is, 4 USDA smokehouses and processing facility. Right now, we have 1 house and we could use 3. first off, we're not able to meet our customer demands, and second of all, we can't even proceed any of our goals as far as sales of smoke products or any products without this facility. So that's, we're kind of at a spot where we are now where we can't do anything maxed out. We have 28 people in a 3,800 square foot building. It's really rough, but anyways, this would open up the processing floor. We'd be able to work a lot more efficiently. It also would open up a few more job opportunities for the community. Help us be able to provide more services to our existing customers, help them to be able to grow. And another main focus that we are looking at is the school, providing products to the schools. One of the things that we're finding is they want cooked ground beef patties. That's one thing that we can't do. We want to be able to do that with that. And so that would be a huge thing because we'd be able to give out to a lot more schools. That,
It's historical context, some of us were on the board, you guys were still on the board then, but Red Barney's had a pilot previously with the original facility, and that one termed last year. So we're in the clear to do a new pilot on the expansion, and most of the expansion takes place on a new parcel, right?
yes, will eventually be attached.
And the finance committee has seen this cost benefit analysis, and we are working to fine tune it as we go, as we can kind of get a better handle on what the anticipated assessment value will be. But so we're kind of lowballing what the anticipated assessment value will be in cost benefit. But if you want to scroll down a bit, Haley, if you could show, if you can have the green line at the bottom of the screen. There and there. There we go. That's the top portion that says cost of the community kind of just overviews what the cost of providing incentives will be. So tax abatement, sales tax abatement, mortgage tax is not requested in this circumstance. So all of those benefits add up to about 141,000. Again, with the estimated full assessment value taken into consideration. And the benefits on this far outweigh the cost, most of that driven by the number of new jobs created, even though it's only being conservative, right? It's saying it's okay to create 4 new jobs because that helps for reporting purposes. Last time we got a pilot, your employment numbers out of the water, which is it's always a nice thing to be able to say you're exceeding expectations rather than having to justify to the state every year why we're not meeting them. So even with that low number over the course of 10 years, you see that the benefit to the community is far outweighs the cost of the incentives we're providing. Any questions on that? So basically the step we're looking to take today is to we should use an AD too.
I'm here. Can you hear me?
Yeah, do you want to overview
Hi.
the steps we're taking today, Nadine?
Yeah, we're going to authorize the IDA to hold a public hearing for this project, which you explained is the renovation of the 3 existing buildings and the construction of a new about 6,000 square foot building. So the first resolution would be the public hearing resolution that we need to adopt. And then the second resolution is the seeker, because the town of New Bremen's already done the seeker determination for this. So we can go forward with that as well.
Does anybody have any questions?
Any questions? Yeah.
Question, under the notes for expected annual salary generated from temporary construction jobs, just questioning, is that Red Barn needs projection or is that our formula? Is That seems really low
$20 an hour.
for construction.
That was what was on the application.
So it's not a formula that we're using, it came from it.
Yes.
That was my question.
Yep.
Okay, so, any other questions? If not, do we need a roll call vote meeting or?
Yes, you need to have, everybody needs to say aye or nay, or if you're absent or whatever.
All right, so we'll start with the public hearing resolution, so that it's to schedule. Public hearing, which is a required part of this process. Motion. And the second by Jerry, any discussion? And we'll just go around the room here, Goggin. Maybe. Mackenzie.
Yes.
Joe, yes. Jerry. Darlene.
Aye.
And Herb is excused and Jessica just had to step out of the minute. I didn't realize that until I looked around. So, yeah, so. Excuse Jessica. Alright. So that's, motion carries for the public hearing resolution, and so the second would be to adopt new agreements, seeker
Secret resolution, yes.
solution. So,
Secret.
okay, so Jerry made that motion, second. Kenzie. Alright, any discussion? We'll go same order, Goggin. Yes. Kenzie. Joe, yes. Jerry. Darlene. Jessica excused, Herb excused. Alright, motion carries, thank you.
Great. So the IDA is already scheduled a public hearing, I believe, for August 26th. So we'll get that published in the newspaper and get the notice sent to the taxing entities as well.
Great, thank you, and thanks Nadine for,
Oh, you're welcome. All right. Have a great day.
you too. And we had some, good cooperation on this, after having the July meeting, but kind of shaping that timing that still go through the license, but so.
Thank you.
August 26th at 1 p.m. is the public hearing at the town of New Prague. You'd like to come. Generally not get high attendance of those, if you're welcome to join us.
And do something.
Awesome.
Well, we appreciate your time. Good luck.
Thank you for having me in.
Good luck with the project.
Appreciate it.
About you guys.
Be in touch.
Alrighty, so we, went on, the. Thank you, Kenzie. Just the ID report, director.
We can't close.
Good job. Oh, I thought you.
In the back. Is she out there? We don't have anything. Well.
Oh.
Go right. Possibly after executive session.
I thought she was still here.
I think she just took a phone call.
Yeah.
Okay.
She didn't say anything.
That's fine, we'll wait on
IDA board report. That's okay. So this, I did not update this board report from when we were supposed to have our July meeting. So really, the biggest things to report on in a highlight are some of the various legislation that we've been working on and keeping an eye on. We submitted a letter of opposition as well as the county approved a resolution of opposition for having the labor and school representative on IDA boards. That law had passed both houses and was on the governor's desk to sign, but I have not heard anything on that law yet, so it's still undetermined. Yes.
What's the basis of the position? I just want to understand.
Because it eliminates home rule of IDA should have the ability to appoint the right people and the right fit to the boards that meet the needs of their community. And at what point, like if you're gonna require a legislator, a school, a labor, how far can they go to require like manufacturing or municipality? And then we really don't, it limits our options of.
It's not direct opposition to those two categories, thank you.
Yeah.
It's, that's what I was trying to understand, if it was opposition to those categories or just the general
Yeah, just the general.
sense of them determining or.
Yes.
It does seem like, it does seem like it's a little bit of a separate issue in larger places than more rural places from the call that I was on, at least. Rural places, we struggle to get actively engaged people in general, so having them limited to even further, whereas it is, I think, a little different issue in cities and more populated areas.
And I'll do our labor reps, that would be. That was the most. You know,
What do you mean by labor?
like, the union.
Okay.
Usually it's someone that's like,
You could get 2 in 1 if you got a teacher.
That was in the year, head of the year,
Yeah.
or
But-
school representative has to be board member,
Or
It's
their
being-
board.
board member, or like.
No, did they mention what the advantage of that would be? Like, what, you know, like you have to.
Three people.
I mean, our ability to administer pilots directly affects school districts.
Okay.
Then having the labor, I think, would be to ensure that using these like in our projects. But they really didn't have specification other than it's just another oversight, I guess.
That's a good question about the dollar amount for the salary, so that's why I was calculating, like, this doesn't make any sense.
It doesn't.
But it was for 0.75 years, it wasn't for the whole year.
It's $20.
Well, right,
You don't
but,
take construction labor for $20.
right, I was just taken aback by like, this
It's
doesn't
to
have
his benefit.
Oh, it
I mean,
is.
It would have made the
Exactly.
community
higher.
benefits
Higher.
even higher, but it just didn't make sense to me. And I didn't work as hard for me. You can.
I know. Any other questions?
Um. Off topic a little bit. Thank you for that. I think, just a final comment, we've actually talked with, not even so much with just like specifically the IDA board, but with Natalie Lewis about having the education system represent, as a voice. I mean, it's not, I don't think that specific career area is something we've ever been opposed to. We've actually talked about the need to educate our school administrators more on the pilot process and stuff. It's just a matter of how it gets. I mean, we always tried to take a thoughtful approach of having people on this board that actually wanted to be here and engaged, not just filling a position to for the sake of. Is there any correspondence? New business. We're getting into. Really had to wait for Justin to come back here.
No, we don't need.
Okay.
talked a bit about solar at a governance committee meeting back in May, June. And we were kind of walking in the direction of, you know, how do we more fine tune our UTEP and our per megawatt rate to account for maintaining the aesthetics of our community and kind of quantifying that tourism industry as an industry we want to protect. And things like that. The conclusion we kind of came to as we walked through the steps the developer is going to take as they look to plant solar in a community. We're always the last in line, and that hasn't changed. They maybe had looked at our UTEP earlier in the process, but our increases to our per megawatt rate and our the reductions we're willing to give if the land is not prime land have not changed where they're locating in the lease. It hasn't been a decision criteria for them. The cost to be close to the utility for interconnect is so much greater than the $1,500 maybe that they can save per megawatt on their pilot. So I really was excited to nerd out on more advanced calculations on how we do reductions and incentivize differently. And it just doesn't make sense right now. I did some benchmarking, nobody else is doing it, which is not an indicator of whether we should or shouldn't. Because we have been the front runners on creating solar policy at the IDA level. But it just isn't a driver currently. So just for those of you who are at the governance, usually the developer is going to talk to the utility, they're going to talk to the landowner and secure leases. Go through the site plan process either with the municipality or whether that's at the state level. They might talk to Lewis County Planning to work through the zoning laws and things like that. The municipality is definitely talking to them, and we're the last line, always. We can't, even if the municipality is planning with us, they're really not talking to us until they're ready to go. So can you go to the next slide, Kim? So we created this to try to, at least from my mind, try to understand the overlap in the different parties in the solar game. So it's pretty self-explanatory as you look at it. Just kind of Venn diagram on steroids. And then if you can go to the last one, at our governance meeting, we kind of brainstormed what that all means and basically decided that Naturally Lewis kind of needs to be the driver because they are the economic development agency. As we talk about solar, Naturally Lewis is providing the overall direction and has asks out to the people or the entities that they overlap with basically on that Venn diagram. So Naturally Lewis is asking IDA to protect the ag industry, protect tourism, and quality of life and increase pilot revenue. They're asking the LCIDA to increase the community benefits through post community agreements and assist local businesses with taking advantage of solar and wind as well. They're asking municipalities to involve us earlier in the process and communicate with on community benefits offered and provided by the developer. So right now we're working on a project or AES working on a project. But we need to know if they're what they're offering to town, because it's probably not as much as we would ask them to offer. But weighing that into how much we are asking and pushing towns to get more benefit out of these projects. Just opening the communication up there, not having it be a contentious thing where LCDC was trying to take money away from what communities could get in HCA's, but playing off each other and getting the best for the community in general. And then Naturally Lewis asked to Lewis County Planning is to just continue what they've already done a great job at, providing templates to municipalities on what their solar law could look like. And then keep us in the loop, because sometimes they are a step ahead in the process and they hear about a project before we do. questions on that? The direction. Thank you.
Just a slight wording thing, but I would suggest that the IDA whether it said, should say protect and enhance ag industry, protect and enhance tourist industry and health. That's, you know, with the pilots, with the money that we can negotiate.
Yep.
Any other comments on this? I was just gonna pass along, but I was literally just reading this last night, because I've been working with the other county's farming and protection board on some stuff, and they sent me this reference last night. There was a study conducted for Tioga County called the Solar Project Best Practices and Policies for Tioga County Municipalities in May 2022, and it states that they found the Genesee Finger Lakes region renewable energy pilots range from 3,500 to 5,500, with most between 4,000 and 5,000 per megawatt. The study, however, recommended a base level of 7,000 to 8,000 per megawatt AC. So just, I just thought that was interesting relative to the numbers we've been using, that, what, 72, right?
We're at 70.
7,500. You know, that, and we've known that we're on the higher end, but just that that study, you know, recommended for that region pushing up into the range for.
Right, and that's been kind of what we've weighed is, do we increase that even more and make sharper reductions for location preferences? Or do we keep that kind of stagnant and attack it from the community benefit side? Also, not to completely trash on developers, because they have stepped up in a pretty big way onto a big sort of like relief.
I also wanna know at the state level, I continue to get information from the Economic Development Council. It seems that the Climate Leadership and Community Protection Act, CLCPA, is under a lot of scrutiny, and they're urging the governor to do comprehensive assessments of these mandates. Because there's gonna be shortfalls in energy production, obviously with that. So there's a lot of pressure at the state level and a lot of articles being written in the Times Union, which is Albany area, capital region. I think the whole everything just under scrutiny now. And so I would be curious where we go from here. I don't know.
Do we agree with the
And obviously, it's the LCDC's role, not our role. The host community agreement piece of the LCDC is. Absolutely. Because. Just, you know, hearing conversations, it's the same thing over and over again. The towns are being offered what seems like exciting amounts of money, but are minuscule compared to what we know.
right, it just misinformation with the towns being told that they can't have post community agreement because pilot. And that was in the news to one of the municipalities last week. I was like, absolutely not. Pilot does not exclude or.
It's the same thing that we've seen in the past before we tried to do this, was like, you know. Like what they're offering a town is like a 1 or 2 time payment of a tiny amount of money compared to what. The, you know, what we see happen through LCDs. so we did have a need for an executive session based on contract negotiations regarding the brewery property. So that's our final thing, so well, as always, we would, if we have we have a motion to approve to go into executive session, we'll go in, discuss those negotiations, come back out of executive session. Take any actions that might be necessary, and then, if there's no other items, we would adjourn. So, motion from Jerry to go into executive session. Second by Darlene, all in favor? Right, All right, we're out of executive session. The staff is going to continue to research the topic and work with the other party on clarifying some information that hopefully we can discuss further at our September meeting. Is there anything else for today's agenda? If not, I'll take a motion to adjourn this meeting. Jerry, second, Goggin. All in favor, aye. Meeting adjourned.